Hello, everybody, and good week. This is Eli Levy with Cannon Trading. We are going to view some charts for this week. We're going to start with our disclaimer. Please take a view, look at that disclaimer. All right, so the first thing we're going to look at is the TNX, the 10-year yield. You know, we like the 10-year yield. Like what's going on over there. And as you could see, I have, if we're looking at a 1-year chart and 10-year, we have on a head and shoulder formation here, inverted head and shoulder formation. As you could see, left shoulder, head, and the right shoulder. We've been trading below the 20 and the 50-day moving average for quite some time, as you could see, since about July. And then we started creeping and trading above that area. We kind of hit a trend line, this green line that you could see, and we are now trading above the 200-day moving average. And here we are trying to see what's going to be support. So we have a bull flag. Okay, so you could see now this is a bull flag, this formation. One of the things that I like on the bull flag or a bear flag, and the way I like to trade it, which minimizes risk, is people usually buy breakouts. They wait for the flag to break out and they buy it. I actually like to buy supports along the trend line. Then when we hit the resistance part of the trend line, to take half a profit and let the other half ride. Then, if we are correct and it's trading above, it breaks out, we come back to the resistance part of the trend line, and then we could think about adding to the position. Now, obviously, this could work the other way. You know, the bull flag doesn't have to work, and we could have a breakdown going all the way down to the next support, which would be the 20-day moving average. But why am I looking at the 10-year? Because of the fact that the 10-year has gone back up to about 436, I think it was, more or less. Um, and that is a drag on the market, okay? If companies are having to pay higher interest in order to borrow money, that is a problem. That is a drag on the market. So I'm keeping a close eye on the 10-year in order to know what is going to happen with the markets, how it's going to affect the market. Another thing is, the Fed has been lowering rates, short-term rates, and that technically is supposed to bring the yield down. But they did the same thing in Europe, and that didn't really help. The longer-term yields have been creeping up, even though they've been lowering the short-term yield. So that is something also to keep an eye on. Next thing I want to talk about is the Russell. The futures on the Russell, as you can see, I'm showing you a trend line that is going all the way back to about April of 25, which was the last low that we had, right? The bottom in the Russell. You see this trend line I formed here, the purple line? We're pretty much reaching that right now. This was a support line, one, two, then it broke, it turned into a resistance once here, another time here, and again, it happened on Thursday. I'm sorry I'm showing this to you a bit late, but this is a major area that you should keep an eye on. The next resistance after that is, you see, it's a channel that we traded in, would be the resistance on the channel somewhere around 28.33, more or less. So if I'm going to enlarge that for you, just to give you an idea of what's going on here, this was also right around the higher band of the Bollinger Band, and it acted as a resistance. So this is something to look at on the Russell, okay? Next, I'm looking at the dollar index. It's a dollar versus currencies, other currencies. First thing I'm going to point out, I listened on the Podcast Exchange, which is a Goldman Sachs podcast, and they mentioned that for 2025, they believe that the dollar was overvalued by close to 20% and versus other currencies. They believe that it's still overvalued now about 15%, and they believe there will be a pull-in for another about 3%. You could look for that podcast yourself and listen. But I want to point something interesting out. You see this trend line, which is all goes all the way back to 2008, right? Sorry, this trend line right here, which goes all the way back to 2011. You see this blue line that I put up here? You had a support once, another major support, a third major support. It's really interesting. So I put up an article, YouTube on this a few months ago, and I'm going to show it to you what it looks like on a daily chart in a second. But before that, I want to show you, you see the yellow line? It's the 50-day moving average. The green line is the 20-day moving average. This is a quarterly. You look at each candle here as a quarter, represents a quarter. So that's 3 months of trading. And right now we have the 50-day moving average on the quarterly chart acting as support. So that is something to look at. The next one is the 100-day moving average. Let's take a look at a daily chart, and I want to show you some interesting moves here. So as you can see, on July, we hit this trend line, which this trend line is a support trend line. Support and resistance lines don't only have to be, a bottom, a double bottom, or a triple bottom. That's a support. It could also be a vertical trend line. And as you could see, we hit that trend line to the T, give or take, and we bounced off it. We went all the way up from 90, what it was, 97, all the way up to about 100. We did it again. I remember on the day the Fed had their Fed meeting, we went underneath. I was looking at futures. I was looking at options to see what's going to happen. They closed above the trend line. Again, they went to that resistance. As you could see, this whole entire area, they kind of broke it a little bit, and then they fell off again. And that's also the 200-day moving average, which is now acting as a resistance. They're trying to break it, but it's acting as resistance. So now again, here we are at this trend line. Friday, we broke it. And for the first time, we closed below this trend line. So this is going to be interesting because you have this trend line. You also have that support that I showed you on the 50-day moving average. So this is something to look at. But before you jump into a trade, whether it be long, whether it be short, I'm going to show you something which is going to help you assess risk. So the first thing you have to ask yourself is what type of time frame am I entering my trade for? Am I going in for, a few minutes? Am I going in for a few hours? Am I going in for a few days? Am I going in for a few months? And so on. So one of the things that I do to assess my risk and to know how much risk am I taking here, more or less, just to get an idea. I use a 4-hour chart. I usually go back to about 30 days. You're looking at give or take about 30 days right now. And I look at the RSI. And if you're looking on large the RSI for you right here, here's the RSI. We say 70 is overbought in RSI, 30 is oversold. So as you can see, we went into oversold territory on Thursday, which was about here, $98. So you're going to say to yourself, okay, so I could buy the DXY because we're in oversold territory. No, that doesn't really work that way because as you could see, the RSI could continue going down and we went down from 98, 98.9 more or less all the way down to 98. And the same thing happened here. We hit this RSI again at about 30 and we went down from 98 all the way down to about 97. So this could continue, for days below the RSI of 30. But what it does is at least gives you an indication. Am I shorting where this actually has a chance to go back up? Am I taking a lot of risk here? Or am I actually selling where things are appearing to be overbought according to the RSI? So I use the RSI as an indicator as to tell me, am I jumping the gun? Should I be taking such a big position? Should I be scaling into the position? Maybe take a quarter of the position here, add another quarter later. That is an indicator that I'm using in order to help me assess my risk. All right, next up, I know this chart looks like a big mess, but you're looking at the SPX. This is what I'm trading usually for a mini S&P. I just want to point something out for you here, and then we'll get into what's going on right now. From about October, November 23rd, we have this blue trend line. It was support, support, support. It broke down, turned into resistance, resistance, resistance. Now I'm going to go and show you what's happening with this trend line now. And here we are. You're looking at 2 months, give or take. This is that same trend line. You see that? It acted as a resistance. Again, here is a resistance. Again here, and it happened again last week. This is what I'm looking at as a major area, 7,010, give or take on the S&P, for resistance, as a hurdle that we have to figure out a way, the market wants to figure out a way to get above. Now, let's see what's going on here for the last few months. You're looking now at a weekly graph. The S&P hasn't done anything for, hasn't done anything. We've been trading between 7,000 and pretty much 60, 65.50, more or less, okay? And the 20-day moving average, the green line has been acting so far as the support for the market for the S&P. And on the daily chart, it's the 100-day moving average that's been acting as support so far. Every time we've been falling there, we found some sort of support. So one of my first indicators was when I open up the week, I'm going to teach you something. I'm looking at last week. So I'm looking at right here, last week. I look at last week's high and low price points and open and close. I look at close the most. That's my biggest indicator. But usually I find trades at last week's high. If last week's high was 69.3475. When the S&P is going to reach 69.3475, somewhere around that area, I'm going to find a trade. Usually that if it's coming down from below to 69.34, I use that as a resistance. I find some kind of trade. But obviously there are a lot of more things that are involved as to whether there could be some kind of fundamental news coming out, economic reports, things could be flying right through that resistance. And the same thing for the support zones. I use last week's low as support zones. So if I am trading, if the S&P, another indication I use is the S&P trading net positive for the week? Are we trading above last week's close, or are we trading below last week's close? It gives me an indication as to what's going on. But those are usually the first support and resistance lines that I have in order to understand what is going on in the market. So next I'm looking at wheat futures. If we look at a daily graph, you could see that wheat futures kind of had support around the 508, about 3 times more or less in the last month. And then we flew up all the way up to 534 on Friday. So we're pulling in a little bit right now. This is a 5-minute graph. And I was looking as to where there could be some sort of support for this trade. So if wheat is really, really strong, my algorithms came in at somewhere around 523.25. That is if wheat is really, really strong. You cannot rely on these numbers and say, oh, okay, I'm going to take along in that area. But these numbers could help you get an indication as to what's going on in the trade. You'll see when wheat is trading somewhere around that number, you're going to see what's happening. If it's trading and staying below that number, usually the downtrade will continue. If it's going to support around that number, then you're going to get some higher prices that will be acting as a support. The best Fibonacci numbers I found was 517, which was 61% retracement, and and I found another support right around here at 516. So for the trade that has the least risk, I'll be looking at 517 or 512.65. Those are the 61 and the 78 Fibonacci numbers that I'm looking at wheat. And last but not least, I don't want to take too much time on this video, but we're going to talk about the elephant in the room, and that is silver, right? So silver, All-time high was 50-50. We broke out on the 50-50, had a little bit of support, and it's just parabolic move is what we call this. You see, it's running on the Bollinger Bands. It's on the high end of the Bollinger Band. It's every single time it's hitting that, I see a little bit of a pull in. You know, you had it here, you had it here again. How do you trade something like this? Nobody could tell you how to trade something like this. This could keep running. This could have a crazy retracement. So it's kind of impossible. But what I did find is I love trading futures because if you're trading futures, it's different than trading options. You know, you're not really going, well, okay, I don't want to say the wrong thing. So when I'm trading futures and something doesn't really move much, if the contract won't move much, I'm not really losing much money. But if I'm trading an option, the contract doesn't move, I'm losing the time value on the contract. So if you're going to trade silver, you got to take into consideration that this is very, very risky. Nobody could help you and explain to you what is going on. There are tons and tons of scenarios as to what is happening with it. But I did find some supports and resistance that you could use in order to try to understand where this could be coming into support if it does. Where the resistance is, I can't really tell you unless you pull up some Fibonacci numbers, and I'm not going to do that at this point. So the first major Fibonacci retracement is at 68.92, which also happens to be the 58 moving average at 69.35. And if you're going to look at it in a shorter term Fibonacci, which what I did was I pretty much pulled the last resistance from 50-50 all the way to where we are every single day. Now happens to be 110.92. So the first Fibonacci number that comes in, which is 61, would be obviously there are the 23.38 before that, but I'm looking at 73.69 and 63.57. Those are the ones with the least amount of risk. Do I expect that it's going to pull in all the way there? Nobody knows. I don't know. It's very hard to understand how this is going to trade, but you obviously have your moving averages, and then I use my Fibonacci numbers in order to know what's going on. A strategy I did use in the past, which is really complicated, but you need to know how to do it. If you got to trade both options and the futures. And what I did was I said, okay, let's say that I believe that silver is going to go up to $200, right? So what I could do is I could pretty much buy a contract on silver, let's say on the SLV ETF. And if that contract is going to cost me about, let's say $100, we'll throw out a round number. And what I did was I took the futures short for half that amount. So if the SLV would move up 1 point, I would really only be losing on the contract a half a point. And what ended up happening was if I took, let's say, for a month out, right, the contract. So if the option would go up by a point, I would lose 50 cents on the futures contract. But if the option would fall, okay, and I wouldn't be making any money on the option, I would be losing that $100 and silver would be coming in because I'm short on the futures, then I would actually have to wait about 2 points in order to break even on the money I paid for the contract. When do I have risk on that trade? If silver won't do anything. If silver won't do anything, I'm not going to lose or make any money on the futures, but I'm going to lose residual value on the option, and then the option is going to expire worthless. So I'm going to lose money on the option. I'm not going to make any money in the futures. Hence, then it's going to be a losing trade. But if you believe that the volatility in the futures on silver is going to continue, that is a really interesting hedge. If you guys want to talk further about that with me, I am open for discussion on that topic. It is an interesting topic. Anyways, I hope you guys enjoyed this video, and I will be seeing you next week on next week's video. Have a great day and good luck trading. Don't forget to use stops, risk management, and talk to a professional if you need some help. Thank you.